Hey everyone, welcome back to Corporate Decoder, the place where we crack open the corporate world and find the hidden treasures within SEC filings to see if these companies are truly worth your hard-earned cash. Today we are diving deep into HCM2 Acquisition Corporation, latest filing, an amended S-4 report that lays out a massive deal. It looks like a SPAC. HCM2 Acquisition Corporation is merging with a company called Terrestrial Energy Inc. And this is not just any merger, it is a significant one with big implications for shareholders. Before we dive into the nitty-gritty, make sure you are subscribed to Corporate Decoder. We are constantly decoding these filings so you don't have to. And hey, if you want to chat about these plays and get more insights, join our Discord community linked in the description below. Alright, first things first, this is an amendment to Form S-4, a document companies file when they are planning to merge or undergo a significant corporate change and need to register their securities. This filing is an update, amendment number 4, to be exact, which means they have already gone through a few rounds with the key players here. Our HCM2 Acquisition Corporation, which is essentially a SPAC or a special purpose acquisition company, and Terrestrial Energy Inc., the company they are planning to merge with. The goal is to combine these entities into a new company that will eventually be named Terrestrial Energy Incorporated. Right off the bat, this filing has all the usual SEC paperwork, but what's truly important for us is the deal itself. HCM2 Acquisition Corp is a SPAC, meaning it was created with the sole purpose of acquiring another company, and Terrestrial Energy Inc. is that target. They are planning to complete a business combination which involves a merger, and this means HCM2 will effectively become Terrestrial Energy. Let's talk about the heart of the matter, the business combination agreement. This document, dated the 26th of March 2025, outlines the entire deal. Essentially, HCM2, after domesticating into a Delaware corporation, will merge with Terrestrial Energy. Terrestrial Energy will survive, but HCM2 will become its sole stockholder. This is a big move, and it means a lot of shares are changing hands and a new structure is being formed. When is all this supposed to happen? The filing says it is as soon as practicable after the registration statement is declared effective and upon completion of the transactions. This typically means they are aiming for late 2025, but these dates can always shift. Now, let's look at the company's status. They've checked the boxes for being an accelerated filer, a non-accelerated filer, and a smaller reporting company. They are also an emerging growth company and have elected not to use the extended transition period for complying with new or revised financial accounting. Standards means they are adopting new standards faster, which can be a sign of confidence or a strategic move. The filing date is the 23rd of September 2025. This is an amendment, number 4. So they've been working on this deal for a while, refining the details. We see a co-registrant here, Terrestrial Energy Incorporated, stating it is a Delaware corporation. This confirms the target is a Delaware company, and after the merger, the combined entity will operate under this name. This document is essentially a proxy statement for an extraordinary general meeting of HCM2's shareholders. They are asking shareholders to vote on several proposals, with the main one being the approval of this business combination. The board of directors of HCM2 has unanimously approved this deal. That's usually a good sign, but we always need to look behind the curtain to see who benefits. This is a key detail for public shareholders. Before the company changes its structure, it will redeem public shares that are properly tendered. This is standard for SPACs and gives public shareholders a chance to get their cash back if they don't want to be part of the new company. Here is where we see significant financial backing. HCM2 has agreements with what are called PIPE investors. These are investors who commit to buying shares privately, usually before or around the same time as the big merger. They are buying 5 million shares at $10 each, which is a solid $50 million investment. This tells us there is confidence from the investment community about this deal. This is crucial for the deal to go through. The PIPE financing is dependent on having at least $75 million left in the trust account after any redemptions from public shareholders. This ensures the combined company has enough cash to operate. This is a smart move to avoid a cash crunch. Now for the big question, compensation for the insiders. The sponsor, which seems to be HCM Investor Holdings, the LLC, is set to receive a substantial amount of shares, over 5.6 million and almost 4.3 million warrants. They bought these founder shares for a tiny fraction of a cent each. So if this merger goes through, they stand to make a fortune. This level of dilution for redeeming public shareholders is notable. Sean Matthews, the chairman and CEO of HCM II, seems to have a significant economic stake in these founder shares and warrants. He's essentially cashing in on his efforts to find and structure this deal. The shareholder meeting is scheduled for the 20th of October 2025. This is where the votes will happen, so mark your calendars if you are an HCM2 shareholder. Standard SEC disclaimer alert. They are saying no regulator has approved or disapproved this deal yet, and any claims to the contrary are a criminal offense. This is important for transparency. Let's hit the summary section for a quick overview. HCM2 is a SPAC that went public in August 2024, raising $230 million. Terrestrial Energy is the target, focused on developing advanced nuclear reactors, specifically the integral molten salt reactor. They recently made some moves, completing a bridge round for about $11 million and selling Series and -1 preferred stock for $25.8 million. They were also selected for a DOE program, which is a pretty big deal for a nuclear tech company. The first proposal is the big one approving the business combination agreement. Shareholders need to vote yes for this to happen. Next up is the domestication proposal. This is where HCM2I, currently a Cayman Islands company, will change its legal home to Delaware. This is a common move for SPACs to align with US corporate and legal standards. This proposal is to approve the issuance of shares in connection with that PIPE financing we talked about earlier, which is also crucial for the deal. Now, for a reality check, the risk factors section, this is where they lay out all the potential bad things that could happen. There are risks related to the business combination itself, including insider interests, potential for dilution, and concerns about the company's ability to continue as a going concern. Then, there are the risks tied to Terrestrial Energy's business, which are quite substantial. This is a big one. Terrestrial Energy has not yet built a commercial MSR plant and has no binding contracts with customers. This means their entire business plan hinges on future successes, not past performance. Their revenue projections are based on future sales of engineering services, reactor components, and fuel. They're also warning about stock price volatility. The value of your investment could swing wildly after the merger, and there is no guarantee on future performance. Time for the numbers, and Terrestrial Energy's financials are, shall we say, early stage for the 6 months ending the 30th of June 2025. They had virtually no revenue, showing a net loss of over $12.5 million. For the full year 2024, revenue was about $248,000, with a net loss of over $11.4 million. They are burning cash, which is typical for a company in this development phase, but it highlights the need for this business combination to succeed. Looking at the balance sheet as of the 30th of June 2025, Terrestrial Energy has about $35 million in total assets, but check this out, total liabilities are over $58 million, resulting in a total stockholders deficit of over $23 million. This means they have more liabilities than assets, confirming their struggle with profitability. For the 6 months ending in June 2025, the net loss was a hefty $12.5 million. This shows a significant operating loss. Now for the pro forma combined data, which shows what things might look like after the merger, in the no redemption scenario, meaning shareholders done. T-cash out, the combined company would have over 105 million shares outstanding. But if we look at the maximum contractual redemption scenario, where lots of shareholders decide to redeem their shares for cash a common occurrence with SPACs the net loss, per S-hair jumps to around $0.13. Fewer shares for public shareholders means each share now carries a bigger chunk of that loss, and the overall ownership percentages shift dramatically, with Terrestrial Energy stockholders ending up with a much larger piece of the pie. This balance sheet shows the combined picture in the no redemption scenario. Total assets are around $309 million, with stockholders' equity being positive. But in the maximum contractual redemption scenario, total assets drop to about $169 million and stockholders' equity becomes negative. This really shows how much redemptions can impact the financial health of the combined entity. HCM2 itself, pre-merger, had minimal operations. Their main asset was the cash in the trust account from their IPO, which was about $235 million at the end of 2024, intended to fund the acquisition. Let's look at the leadership team projected to be in place after the merger. Simon Irish will be the CEO. Frederick Buckman is nominated to be the chairman of the board. Sean Matthews, who has been leading HCM2, is also nominated to be a director. Many of these individuals have robust backgrounds in finance, nuclear energy, and business leadership. Notably, many of the nominees are expected to qualify as independent directors, which is a good sign for corporate governance. Who actually owns this company pre-merger? The sponsor HCM Investor Holdings II, LLC, held about 20% of HCM2 shares. Post-merger, assuming no redemptions, Terrestrial Energy stockholders will own around 64% of the new company, with HCM True public shareholders holding only about 21.9%. If maximum redemptions happen, Terrestrial Energy stockholders could own closer to 73.6%, and HCM2 public shareholders might hold as little as 10.4%. This highlights how much redemptions can dilute the original SPAC shareholders. This section details transactions involving insiders. We see that the sponsor, which includes Sean Matthews, purchased founder shares for very little and private placement warrants for $1 each. They stand to gain substantially from the merger, which is a common dynamic in SPAC deals. Sean Matthews also holds Terrestrial convertible notes, which will be converted into new Terrestrial shares. Quite the financial play. A big part of attracting and retaining talent after the merger is their equity incentive plan. They are proposing to authorize 500 million shares of common stock and 1 million shares of preferred stock for this plan. This is how they plan to incentivize employees and directors going forward. This is the appendix, the actual business combination agreement. It is a massive document detailing the structure, consideration, closing conditions, and all the legal obligations. It confirms the merger structure where merger submerges into Terrestrial Energy, with Terrestrial Energy surviving as a subsidiary of the post-domestication. HCM2. Scroll, what is my take on all of this? COVID-19, well, Terrestrial Energy is clearly a company in its very early stages, betting heavily on a future demand for advanced nuclear energy. They have a solid technological concept with their IMSR plant, and the government support is a positive signal. However, they have no commercial operations, significant losses, and are dependent on future financing and approvals that are far from guaranteed. The SPAC HCM2 is a vehicle to bring this to the public markets through significant dilution for its original public shareholders, while the sponsor and insiders stand to make a substantial profit. The success of this entire venture hinges on Terrestrial Energy, its ability to navigate a complex regulatory landscape, secure massive funding for construction, and actually build and sell these reactors. It is a high-risk, high-reward scenario. The financial tables clearly show a company seeking to overcome significant debt and operating losses. The pro forma numbers, especially in the maximum redemption scenario, illustrate the substantial dilution public shareholders will face. The lack of current revenue is a major red flag, and the reliance on future government contracts and investor confidence makes this a venture with considerable downside risk. Alright, that is our breakdown of HCM2 and Terrestrial Energy. latest filing. What is your take on this deal and what it signals for the future of nuclear energy and SPAC mergers? Drop your thoughts in the comments below. If this decode was valuable, hitting that like button really helps. And make sure you subscribe to Corporate Decoder for more deep dives into the world of corporate finance. And remember, our Discord community is linked in the description if you want to chat more. Thanks for watching. See you next time.